I do want to do one thing. I run a group, and I know how much effort it takes to put every event like this. So please, some kudos to Tom for putting this. It shows when you do a good job, when you have it time after time, such a big crowd here. And I've attended many of your meetings, definitely growing, but I know how much effort, so thank you for making the effort, a lot of effort. Next thing, when Tom came to me, we know each other for quite some time, and when Tom came to me and said, I want you to come and speak to my group, I said, okay, I know this group a little bit, and obviously you can hear who's in this room. There's a lot of people that are doing deals. It's just kudos for you guys, really, really do. Even if you do a small amount of deals or a large amount, kudos for you, as long as you're there and doing, and this is part of it. What I'm going to talk tonight is this. There's a lot of people that are trying to get in or about to get in, and hopefully you will benefit from what I'm going to talk about. There are always tire kickers in the room. I don't see any of the typical tire kickers tonight, but I know they're out there. Some of them I do actually see every once in a while in the meetings. I just don't see those faces here, and I like that. If you guys want to learn, so when Tom came to me, I said, okay, I can't come here. This is such a, a group of so many people, professionals, investors, realtors, agents, very mixed crowd. And I thought, if I'm going to come in and I'm going to talk about this strategy or that strategy or out of state or LLCs or whatever, I do deals all the time myself. I'm a big investor and I work a lot with investors, but I felt that this is the wrong topic, something necessarily that I do to bring to this crowd, and I want to do something beneficial, and I'm going to talk about that. But if you want to learn about tonight, so what I suggest is this. All of you guys are at the back, Stefan, David, Kim, Jerry, all of you guys, pull up your chair. We'll take a second, come up here if you really want to learn. All the way at the back, wholesalers don't learn anything from experience. So by all means, you don't have to, but David and Jerry and Kim and the youngest investor that we have in the crowd, pull up the chair, come up over here if you really want to benefit. All the way at the back, you're going to benefit very little. Most of the benefit goes all the way to Nikki. Yes. So Nikki, you're in. Barry, you're in. But you guys, if you want to benefit, by all means, come up over here. What I'm not going to cover, LLCs, no. Out of state, in states, renting, flipping, REOs, short sales, all of this stuff I'm not going to cover at all tonight. Actually, maybe I hit something good. I'm not going to talk about private money or public money or IPO or crowdfunding or whatever, all those deals. What I am going to talk about is factors that will make you successful or more successful investors, at least from my experience and my humble opinion. This is something I'm kind of always thinking and digesting and reading and learning about, and I want to make you guys better at what you do, or better if you're going into this game of investing. So this is what my topic, this is what I want to cover tonight. And actually, there's so many people here that are, I'm an agent, but I invest, right? Mark is one of those people. Michael is one of those people. So almost everybody here that is an investor has two layers, personally investing, but also running a business. So a lot of the things that I'm going to talk about are applicable on your business as well. So you have to maybe modify it a little bit, but it could be applicable to your business as well. So you may be benefiting on a two-layer system here. So let's talk about the factors. Let's talk about the factors that I'm talking about here to make you more successful. I gave it a lot of thoughts, and what I want to do is two parts. Part one, what I call the more trivial stuff. But I want to make sure we cover it, because even in the trivial stuff, we tend to miss some things. So let's cover the trivial, and then I'm going to talk about what's the more critical ones, at least in my opinion. Now, the way this presentation started is, you know how you see someone, and you hear what they're doing, and you see how successful they are, and you kick yourself and you say, how is this possible? This guy is more successful than I am. Definitely I'm smarter, right? How is that even possible? I mean, haven't you asked yourself those questions? So I always ask those questions. I don't always ask them with the smarter questions because I think I'm smarter than most people, if not all people, and I'm very modest guy. But altogether, I am, I always think about it, how, regardless smart or not, I'm just in my mind, this guy is an average guy. How is it possible that this guy is so successful? What is he doing different than I am? On a business level, investing level, how come he's doing well and I'm not as much as he does or something like that? It's always good to compare yourself in order to drive yourself for better success. That's the whole point here, to better and to succeed better for our own sake. So the first area that I'm going to cover is what I call the environment of investing, not the actual reasons why I think he's better than me, or doing better than me. Not better than me, but doing better than me. So let's talk about that environment. Let's talk about the important, but somewhat trivial stuff. Who has not heard the location? Please stand up and leave the room. Just kidding. Okay, we all know that. Trivial, yes. Important, absolutely. Is there anything new about it? Of course not. Right? So location, always important thing to have when we're talking about investing. Remember, my goal is investing, not your business life, but this is somewhat related. Next. How about the deal itself? Important or not? You bet, of course it is. Okay? Every deal needs to make sense, otherwise what's the point? But then again, why is those two deals, the one, for example, I'm doing and the one this guy, that we're going to use him a lot tonight, is doing, how come he's doing better? Same location, right, next door, he's doing better. How is that possible? Deal is important, absolutely, but still not what creates that success factor that we're going to talk about later. Team, trivial, very important to have a reliable team or trustworthy or whatever you want to call it in order to succeed. But again, that's not changing. Now, this is one of my favorite. How many people is there anyone in the room except the youngest investor that we have here that have not heard the term buy low, sell high? Anyone? Perfect. I'm not going to make you leave this room this time. I just want to make sure. Buy low, sell high. Very trivial. Now, how many of you are familiar with people that are not really following that model? I know plenty. Let me give you a very recent example. Everything that I do is out of state. 100% of my investments and flips and all of that is out of state. And out of state, I have been over my career since 2000. I haven't even said anything about myself, so maybe I should say quickly, besides my name that you already see, I've been investing since 2002. I started investing when I used to live in Tel Aviv, Israel. So that's, the term out of state is tiny for my scale, because I did out of the country. I moved to the Bay Area in 2004 and continued investing out of state in multiple states. I have been since 2002, I've probably been investing in close to 40, 45 metros, okay? So that's the scale of the areas, sometimes more than one metro in one state, so that's probably more than 12, 13 states altogether. And I had the experience and exposure to all of those areas, and pretty much on a large scale. Not just my own scale, but the scale of working with other investors. And when you work on my scale with thousands of investors and many thousands of transactions, you get to see a couple of things. One of those things is this exact point. Very trivial, I'm still at the trivial stuff. I'm not even making any new, factors to you guys here, not introducing anything new. But for example, recent example, at the second cycle that we're now going through, right? We're already seems like we're going, through another cycle. Maybe you can say, I want to introduce a new term to the real estate world. It's called peak, right? We all are familiar with the bottom. We have all talked about the bottom for the past years. You can only talk about, have we passed the bottom? Is it just, behind us? How long have we passed the bottom? Is the bottom there? Before, after? God damn it, this bottom is a pain in the neck. But you know what? For now, I can say this has been enough months for us to know that we've passed the bottom. Okay? At least this one. I do see another bottom in the future. I can't see when it's coming. Somewhere in the next 100 years, it will be here. Like the big earthquake they're talking about. I don't know. I'm just saying, now I want to reintroduce a new term to the real estate world. It's called peak. And you know what? Buying high, unlike many investors, buying at the peak, right? Who wants to buy the peak? Not me. What do many investors do? They go to Phoenix right now. Phoenix as an example. Great market. I've been 2 cycles in Phoenix already. In January of 2012, I pulled out of Phoenix for my investors. I said, no more Phoenix for you. You're out. Now, people think I'm crazy, right? Some investors, you're not going to Phoenix? No, the numbers are not there. The herd is coming. Phoenix is going through another. So if anyone, in my humble opinion, you may have a different interpretation or you know your ins around Phoenix, going to Phoenix right now, and I love Phoenix as a market. I have nothing wrong to say, nothing bad to say about Phoenix. For example, they're buying it high. I've seen someone sending an email about, 3 weeks ago, $180,000 home, rents for $1,200 in Phoenix. Very bad numbers in my terms for Phoenix. So I'm very happy for all my investors who followed my advice, but low. They're not necessarily selling now, but they're out. None of my investors are buying in Phoenix. Why? Because you need to know when to pull out of the market. What? Phoenix is waiting for me to be ready. It has to be ready first for me to come in. So the invitation is out. It was sent by Phoenix to me. It's in my inbox. I marked it as important, but I'm waiting. So the answer is no. Too pricey and too. I don't care about markets in terms of, Dallas is good and Oklahoma City and other markets around the country are just fine. Why would I go to Phoenix and not get those good numbers where I can get the better numbers elsewhere? Right? Just logic. Well, I'm logical, very logical. Okay. Next point. Again, with the trivial, but very important. Something the trivial is so important not to miss on. Due diligence. To do proper due diligence on every deal. Right? I hope all of you are doing it. Some people doing it, lightheadedly. Some people are doing more. But very, very important point when it comes to real estate investing. Now, how about knowing your market, right? So, for those of you who are kind of spreading all over and buying, I'm not saying all over the Bay Area, but I'm saying I'm investing in 25 states. If you don't do it full time like myself, I know those areas very well, you may are spreading too much. Maybe even 4 markets is too much. How about consolidating for so many reasons I'm not going to go into? And focusing on markets that you know. If you work here and operate here, perfect, and you know that market, perfect. If you go to another state or another metro that is not in your backyard, so to speak, or the 30-minute drive, make sure you know that market. Okay? You don't have to go and live there for a year to know the market. You can call up an agent or a property manager or someone who operates in that market, use them, work with them, learn from their experience for living in that market for a decade or 2 or 16, I don't know. And you gain their knowledge. Most of those people are going to be helpful, if not all of them. So you don't have to go out there and do it yourself, but you just have to know that market well enough to know when to go in, what works, and also, again, when to pull out. Okay, one of the, I would say trivial, but most neglected points by investors. I'll bet most of you, as investors, I don't care what type of investors, you don't have what I call your investment criteria set. And what do I mean by that? It could be very simple stuff. But if you're actively looking at properties, and those are crossing your email/desk on a daily basis, how can you tell if it's an okay, average, good, or bad deal? If you don't have your investment criteria set, I can tell you that I don't need to set them because everything is in my mind already. Remember, I'm a smart guy, right? But when I see a flip property coming my way, I go to my Excel and I have my flip analysis, my quick flip analysis, and within 20 seconds, I know if it's an average, bad, good deal or amazing deal. So that's my start. Then I will start my analysis on the anything else. But I have my criteria. So, for example, if this is, I'll tell you an example. If this is the area that won't work, certain parts. And let's take an example, a house that was sent to me from one of my teams in Atlanta for a flip. This is, I thought, the numbers made perfect sense, but the location, city-wise, was not one of the areas that we typically go to in Atlanta. It was an okay, okay, but not something we typically see. And that immediately raised the flag. And I called my guy saying, we don't normally go there. He said, I know, but this area has not so good area of the city and better areas of the city, not as good as where we typically go, but okay. It's okay, this one sits in the okay area, so it's checks. And I want to make sure the bedrooms, the bathrooms, the square footage, the age of the house, and then if I'm doing it for a rental, the return on investment. Which I'm not going to teach you now, we don't have time to how to analyze, but if I have, what's the minimum age? What's the minimum square footage? What's the minimum specification? What's the price I'm willing to do, because that has to work with how much money I have, financing or not. Okay, how much repairs do I need to do, etc. All of those things, the rent purchase price ratio. And the return on investment, I may need 6 to 10 criteria set, and if I have them set, and I write them down somewhere, and that property crosses my email/desk, I should be able to get an answer very quickly, at least numbers-wise and specification-wise. If you don't have those criteria, what happens? I look at the deal. It's a very nice photo of a house. Beautiful photo. Maybe I should buy it. No, really no. Okay? So really, for your sake, look at the pictures as an add-on and not as the decision factor. Okay? For your sake, get your investment criteria in place tomorrow. Tonight, actually. Tomorrow is too late. Tonight. Okay? So that is very important. Most investors just don't think it's that important. And for me, it only uses for one thing. Well, to see that property. In today's environment, those of you who are making deals, know you have to make decisions very fast. Sometimes I buy properties in a matter of 20 minutes. So, but I have to be able to, I have everything set, but I just need to plug the numbers and I see if the investment criteria, I meet them or not. Sometimes I know them in my head already, but that's the only way I can evaluate a deal if it matches my investment criteria or not. And I'll tell you this, if it's not matching it exactly, but it's around, it's still okay, but at least I have a benchmark. Okay, I think enough said about investment criteria. Do feel, by the way, my style is not to wait with questions if you have all the way to the end, but you can do interrupt with questions if you have. Most likely I'm going to tell you wait until the end, but you can still interrupt. Just kidding. Exit strategies. Strategy or strategies? Have you given some thoughts? Just make sure you did. What are you going to do if the plan, this is real estate. What are you going to do if the plan is not working? The results are not working according to the plan. So at least have in the back of your mind, if things are not working according to the plan, what am I going to do? It doesn't have to be science, but I'm flipping and I'm not selling. Okay, I can tell you right now, I have a house, my worst house, been sitting there for 8 months. The community lost the FHA, approval. It's getting us, in a difficult situation. Okay, there were some other issues that's why it's sitting 8 months. That's my worst deal, but we're renting it. A renter will come in June, I think, and then I'm going to sell it as a rehab and rented property. It's already rehab. Now it's going to be a rent. That's an option. If that wouldn't work, I'm going to bring in the private financing. If that wouldn't work, lease to own. So there are options that I can explore, but at least I know them in my mind. If things are not real estate, there is a good, fair chance things will not happen according to the plan. Not a tiny one, a good, fair one. So be ready with that when you make those deals. Now, let's talk about what really can make you successful. Now, a lot of the things I'm going to talk about right now, when I looked at them after preparing this, I thought about, oh, this is like a muscles. This is like the human muscles. So almost everything that is in the coming list, let me change page, it's like a muscle. Okay, so think about all of those items as being as a muscle. First of all, define your success. Not a critical one, but it's always good to know what is success. So, for example, it can be a simple, like I want to buy 3 properties this year, flip 2 properties, make $10,000 in profit on 1 deal, or whatever. It's, how would you know if you're successful or not if you have not defined that success? I try, and it's not an easy, because it's more, brain power required, but every year to tell myself what are my business goals for the next 6 months, and for the year, what is the major thing that I want to accomplish, and then by 6 months, and then the more simple goals that I want to accomplish, in each and every month. And I do define those kind of very simple, parameters. I know if I hit that, I'm successful, at least on my term. And by the way, I only need only 2 people's term, my term and my wife's, so I'm all set. So define that success. Now, second thing, remember, now we're talking about what makes him more successful than me. So the second thing is determination. Has nothing to do with the property, with the team, with the house, with the location, with the numbers. Determination. We are talking about real estate. All of those that are making deals here have ran into obstacles and things that actually knock them down or slightly knock them down or whatever. We've all had that situation. Determination is one of those factors. It's a muscle that will help you overcome big and small obstacles and help you overcome them and move on and be successful. So remember, determination is extremely important, and don't let situations, big or small, discourage you. Focus. Goddamn focus. And this is like one of the key points. The problem is, no disrespect, Tom, and no disrespect to myself, people come to those meetings and they hear that speaker and it makes perfect sense, and this guy talks about renting out of state, and they leave the room saying, this is what I'm going to do. And for the next week, they're completely pursuing the rental out of state until they go to the next meeting, and there's a guy who talks about land. Aha! This is what I'm going to do. Okay? This time. So now for the following week, they follow that guy and they completely focus on, doing land until they come to the next meeting. And so on and so forth. Or you're sitting and you already have your vision, what you want to do. Flipping Walgreens to Rite Aid, whatever. Doesn't matter. Making, converting, Rite Aids, Safeways to condominiums, whatever. You found your niche. Good for you. Really, really good for you. Focus. Put the blinders on and start saying no to other things that are hitting your desk and saying, this is really a good deal. How many of you heard that? This is an amazing deal. I get people call me or email me or text me and they want to meet with me and they want to engage with me, and many times they come up and say, I have something that I want to discuss with you. When someone tells me I have something I want to discuss with you, huge red flag, maybe tens of flags right there. No. Well, hold on. Tell me more. No, let's meet. Whoa, no way. Okay, the reason is, those guys, they come to me and say, you have such a huge network of investors. You only need to send an email. How easy, and you make money, ching-ching. Yeah, right. I work very hard for every dollar that I make. I'm doing well, I'm happy. My investors are happy, which is the most important thing for me, because they're coming back. So that is my biggest, proud moment, is that they're coming back and investing again and again. The fact that I'm making money in the process is good, but first of all, they're making money and they're very happy. Now, those guys that are coming and you only need to do this and you only need to send an email or something like that, the first thing I tell them, no. First of all, I have a very clear goal and I don't want anything to distract me. Focus. Second, there's never just an email. That email leads to people saying, what about this? And we have a question, and what about that? And then you have to support that. Like you're selling something. So the answer is almost always no. I would only say yes if that follows what I'm trying to accomplish, my business or my investment. In your case, if that works and complements what you're trying to do, perfect, you should. So for me, someone who says, the guy about 2 months ago sent me that situation, and I told him, tell me more, and he says, do you want to make money? I said, yes, I'll meet with you, bring the checkbook, and I'll sit down and make it a very big check. Otherwise, I'm not sitting down with you. And he disappeared. I may miss on a huge, huge, huge opportunity of a lifetime. That's fine. There's another one knocking on the door right now. It's completely fine. I'm so focused that I have to retrain and reuse my focus muscle to keep saying, remember, say no. That deal that someone comes to you and they're saying, let's do this deal together, and they want me to look at it. I may give it a second or two, but as quickly as I see that it doesn't follow what I'm trying to do, again, me, it's a very quick no. Because the reason, it's disturbing my focus. So I'm really that's probably, everyone who's a small business owner in this room knows exactly what I'm talking about. But it's the same thing for your investment. If you're focusing on buying, on going with a niche of, dividing Walgreens into high-end condominiums, if someone offers you a flip property locally and you're going to make it's immediate no. Because that means all your attention span is now on that flip. And you're hurting your Walgreens flipping or your Walgreens condominiums. Okay? That's very, 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 very important muscle to maintain. We do have a special of horse blinders. We sell 2 pairs for the price of 1, and Tom and I can help you with that. Seriously. Next point. Okay? Do I need to go back and talk about focus a little bit more? Okay, good. Hopefully I made a point here. Next point. Mentorship, guidance, someone that will lead your way. This is, again, one of those factors that a lot of people miss on. Okay? I can tell you, here's a disclosure or a confession. When I got started, I didn't have the proper guidance in place. I lost so much money. I made so many mistakes. But I learned everything, myself through really huge tuition. Huge. Not nickel and dime. Okay? So, and I wish I was either smart enough to go and find that person or had that person more present in my life. It was a big miss for me. You need that individual. Okay? That individual will get you out of a tight situation. That individual will probably do good enough of a job to help you avoid it in the first place. This is my as a mentor, what I'm trying to accomplish for my investors is don't even get to that point that you need my help to pull you out of the hole. So that person you should have that person in your life that will help you, no matter if you are starting, somewhat experienced, very experienced. Make sure you get that person as a mentor in your life to help you avoid and also overcome, once you run into the situation. And you know what? Sometimes maybe kick you in the butt and say, no. Remember focus? Put your blinders on. Remember criteria? Is it meeting your criteria? Sometimes you need that, that person to also give you the tough answers or the tough direction, tough love, you could say. Okay, we're having a special. If you wanna download our Educating Your Gut one-on-one ebook, go ahead and click on come up, and you can click over here. It's an interactive screen. Thank you. Yeah, we have a buyer. It's on sale. You download it, and then you get 2 blinders. Okay, what's the point of this? We all know that so many of the decisions we make, investing or not, are coming from our gut. You look at 2 properties, they all look okay. But for some reasons, one of those, everything checks and everything is fine on those 2 properties, but you still need to make a decision between the 2. But for some reason, one of them makes a little bit more sense from here. The reason we work a little bit from here is because we don't have all the answers, we make some assumptions, there's risk involved, and so on and so forth. Okay? What I like to do is not pull answers from my gut. I hate doing that. I think it's immature in a way. I want to educate my gut. So if my gut needs to make that decision, it's educated. Goddamn PhD in gutness. Okay? What do I mean? I go through the process of analyzing and I gain that knowledge. And I go through questions of property managers and rehabbers and other people, and I, again, get educated on that deal. That whole process helps me to educate my gut. Should the answer is not a clear cut of property A, and it's actually, I need to determine between two good ones, I want to make sure I'm making that based on knowledge and education. So make sure you do all this analysis, prep work, a lot of things I talked in the first part, to educate your gut, okay, in order to be able to make that decision.
Dani.
Yeah. Yes. Actually, yes, almost. I probably have a similar one, but with the S. It's missing the S. Okay. Confidence is what I want to talk about next. The more deals you do, the more confidence you will have to do more deals. Simple as that. That really is the confidence muscle. Okay? So if you kind of, dancing with the idea, some of you may be familiar with it. You know, it's had to do a lot with the personality too. But I'll tell you, pull the trigger, do the first one. That's the hardest, right? It's always the hardest to do the first one. Once everything is working fine, I can't understand why even my investors, they buy one, they do well, and they disappear for 2 years. Why? Why? I know you have the money, I know you have the need, I know you want to. Why? So they do want to, first-time buyers, they do want to take a while to get used to it, which is probably better. But 6 months, a year, come back. Right now, you definitely should come back. So confidence is important to build. Now, how would you build your confidence as a business person / an investor? Only one way. You have to, have to pull the trigger and invest. And you do one, and you're scaring and shaking, and things turn out to be, hopefully, okay, maybe even good. And you do another one, and you're not so scary, and you're not so shaking anymore. By the third one, you're sitting tight, you're good. Keep that muscle working. Because I'll tell you, I have done so many deals, and I've been involved in so many investments. I still have doubt. I always, of course, it's called the opposite of risk or the unknown or uncertainty. Of course, I always do. You know what? It's healthy to have it, right? Because it kind of protects you. But at the same time, I have the confidence to pull the trigger literally in minutes if I need to. In some of those markets, I have to respond very quickly to those deals. Otherwise, they're gone. I can tell you, for example, we had one of my teams brought a flip property from Atlanta, and they sent it to me, not yesterday, which was Wednesday, Tuesday night. And one of my investors talked to me on Saturday, said, I want, find me a good one. I texted the address, texted the details, putting it on my website. He's not responding. 5 minutes, he's not responding. I'm calling him, he's not responding. He calls me back 10 minutes after I first sent him the information. Relax, give me a second to analyze. I'll get back to you in a minute. He was already all over it because he knows how fast we need to move. He said, just chill out, I'm just kind of reviewing this. Give me a minute to make sure that everything is okay and that I have enough funds. Okay? So I said, okay, no problem. And we, unfortunately, we only made an offer. Monday we will know. Unfortunately, because we have to wait now for a few days. I hope we get it because it's really nice, a nicer deal. So that's just an example. But he built that confidence. This guy a year ago was a newbie. For him to pull out, almost $200,000 for this deal in Atlanta was unthinkable. It was scary. Now, give me a second, no problem. Give me a second to analyze. So use that muscle. Oh, we're going back. Okay, let's move forward. Let's talk about your support system. Now, support system is not your team, it's not your agent, your realtor. It's the people that are around you. Okay? Let me tell you why I think it's extremely important to have those people around you. When I got started, 2002, 2001 when I started looking into it, 2002 when I bought my first property, high-tech engineer working for an Israeli high-tech company in Tel Aviv, Israel, going like this at evenings to lectures, and around me, only one person does thinking or looking at real estate investments, myself. No one. No one. In the room, of course, but those are all strangers. All my friends, nobody's considering, nobody's doing it. All my family, of course. And the reaction I receive when I talk to people, I want to see what they think. Say, you what? You're going to do what? You buy real estate? Where? In that tiny little place called the United States? Are you nuts? Of course, we are the 7 million people, back then even the 6 million people of Israel. We are a huge empire, right? 6 million strong. And the tiny 300 million, maybe 275 million at the time, or whatever, small, US. And then you go, where? This tiny town called Phoenix, Arizona? Have you ever been there? Do you even know where it is? No, no, and no. But the numbers make sense. Still, 6 million crazy people who call Phoenix home, and they're crazy, I've met them. So all that situation created a very noisy environment for me. All my friends and family, nobody does it. They call me crazy, they call me nuts. And I ended up investing because every time someone calls me crazy or a nut, I see it as a compliment and an encouragement. So I like that. Please call me crazy or not, and I will love you even more. But seriously, that was, for someone young, starting out, no experience, to have that people around you, it's very, very discouraging. And it does tap into your lack of confidence. When I closed on that house, and I didn't know because nobody told me it may sit vacant for a while, because in Israel, things are rented very, very fast because they have serious housing, have had serious housing problem for years. Things are renting left and right very, very fast. Properties do not really sit vacant, at least in the major part of Israel. Over here, you should wait a week, or 2, maybe 3, maybe a month. I had to wait a very nervous-wracking 45 days, okay? Today, it's typical, I know that. Back then, Lord, when I was nervous. I didn't know what to expect, and I was a wreck. Now, you know what happened with my support system? They were waiting for this. Aha! We told you! They were just waiting for this to happen, right? And I completely, I got that, gave them that, on a plate. And that was very, very difficult. The first thing I decided to do from that point on, when it comes to real estate, is to completely shut up. If you're not a positive force in my life, if I keep you, I don't talk to you about those things, so you don't become a negative force. Some negative forces in my life, I kicked out. Seriously. At least maybe I kept them on some level, but on those levels that I share, that closeness with friends and family, you don't really kick out the family, but you don't share with them anymore those things. So I made sure I have that environment. Now, I do want to have a productive environment of investors and friends that are challenging me. They're not saying, you're crazy, you're nuts, don't do this. Have you thought on? Did you consider? Is it doable? All of those things, this is excellent. Now, what I want for you is 2 things. One, if you have that negative environment around you, kick it out. Kick it out professionally, that's what I mean. Don't interact with them, and don't let them be a negative force, because especially the funny thing is, most of those guys that are the negative force, how big of an investors are they? Practically 0 to nothing, typically. But they know well, right, exactly, they talk, but they don't walk. So make sure you have that environment set. So the first thing, kick the negative out. The second thing, if you can, and for some reason I see it a little bit more in the past month or 2, and I think it's awesome when I see it, find that circle. Create that circle of 1 or 2 or 3 or 4 friends. It doesn't have to be this entire room, that's too much. And meet, have a coffee once a week, talk real estate. You don't have to invest together. You don't have to. You don't have to pull funds together. But you're saying, let's walk that path together. Let's hold hands, walk into the sunset. No, let's just meet and talk, and I'll be your kind of devil's advocate, you will be mine. We will just make sure that we're covering all our bases. That will help my confidence. And I want to have that type of a person or people around me, so they will be not, I don't want to say, oh, good for you, good for you, good for you. No, this is bad. They need to challenge me. They need to say, you really think this is possible, or did you look into that, or have you thought about this or that? I want their input as a challenge to make sure I didn't miss on anything. That's why this small circle of 1 or 2 or 3 friends is so important. Now, if you don't have that, here's an idea. Turn to your right or to your left, introduce yourself, and make that, because what better place to have that environment to find that little circle, if not in a place like this one. Okay? Some of you may have it. For some reason, in the past month and a half or 2, I've seen several people that came to me. Actually, at our event on Saturday, 2 ladies came up, and they're exactly doing that, but they're already thinking of pulling funds together. And very quickly, in the quick conversation that we had, I told them, you guys are just off on one thing. It's great that you're working together, doing this path together, helping each other, but I can already tell you're not on the same page when it comes to goals and what you want to accomplish in your financial situation. So my suggestion for you, break the business partnership, keep the relationship to work together. Okay? I think that's very, very helpful. If you can find that 1 person or 2, and you meet once a week for a coffee or something like that, this is awesome for you. This is excellent support system. This is exactly the people that you want to have next to you, making sure you're doing things properly. They have your back and they have your front, so to speak. Okay? My favorite. Any tire kickers in the room? Interesting. None. Oh, Richard. Wow.
Okay.
Yeah. Thank you. I know you're not, so sorry, you failed. Because I know that you do invest, so that's not the case. You can't you disqualify for being a non-doer. So let me just say this: if you're coming to this event or any events, and I see some people that are coming again and again and again and again and again, I continue a few more times, and doing absolutely nothing. Sometimes I can already identify them, and sometimes I just see it, we see that patterns a little bit later in our simple relationship of seeing those people and chatting them, in events. If you're not pulling the trigger, if you're not investing in real estate, I have some terrible news for you. You are not an investor. If you go to that event and this amazing guru sits, stands on stage and says, "Good for you for being in this real estate investment event. From now on, you are investors. Go out and get your business card and put real estate investors." Have you ever seen that? You are not an investor. You want to be. I hope you will be. If you put your name on a card and you say, "I'm a real estate investor," you're not. You're not. When you buy that property or participate in that transaction of real estate investment, then you are. This is the talkers and the walkers. Now, I do agree with this speaker who says those things. Yes, you can't be a real estate investor sitting at home watching reality shows. Ain't gonna happen. Going to events like this one and talking about it as a starting point, perfect. You don't have to rush out and make that business card. Perfect starting point. Start focusing and narrowing down on what you need to do in order to be an actual investor, worker, not a talker. Until you pull that trigger, I don't care how many business cards you've done, how many websites you put together, and how many people you're told, "I'm a real estate investor." You're just not. Okay? This is a very exclusive club that requires you to shell money out and invest in real estate. I welcome you to join my club. I do. But you're not an investor until you're actually doing it. So be a doer if you're not. Now, I'll tell you one other thing about this point. If you're that type of a person that you really want to do it, but you're still something is holding you back, and you don't have the mentor, you do have the mentor, or whatever, stop for a second. Forget about everything that I just said, and focus on that point for a second. What needs to happen to change that For you to become a doer, what items, questions, answers, what need to happen in order for you to step up and do that, and pull the trigger and make an investment and become an investor. Okay? Everything else, location, is irrelevant if you're just a talker. And team and analysis and due diligence and blah, blah, confidence, everything that I said, forget it. Focus on one thing. And that's what, that will change that. Now, with that said, you're not going to have 100% of the answers 100% of the time. That's why they call it risk. So be aware of that. But at least you have minimized that, mitigated the risk, found ways how to, help you, avoid mistakes and, pull the trigger and start investing in real estate. Remember, I'm still in the phase of the presentation, or the part of the presentation, that I'm looking at that guy and seeing what is he doing well that works for him, making him so successful. So all of those points, and you see I haven't talked about a dollar or financing or strategy, because that's nothing to do with it. It's all about us right now. You, not me, you. So check your weaknesses and strengths and maybe work through that. Don't go with, if you see that it's hard for you to go in a certain direction because you're just not feeling that comfortable, it's okay. Especially when you're starting, but even if further down the line. Don't. Take the easy route. It's okay to make yourself choose the easy path in order to actually invest. It really is okay. So know those weaknesses and strengths that you have. And I see people that are not, except one, I see only mature adults here. By now, you should know yourself a little bit. You should have a feeling what is strong, what is your strong suit, and what is not your strong suit. Follow that. Go with that. It's okay. If you're not feeling, you think that, maybe going out of state is not something you're very comfortable because whatever your personality, don't. Stay in state. Buy local. That's fine. So just to make sure you know those things and you follow that inner, intuition or strengths and weaknesses that you know about yourself in order to become successful. I've learned that a little bit the hard way. I used to be the guy that I would always choose the path that it's more difficult and challenging. I don't know personality. I had to work on myself and say, why are you doing it to yourself? You're already putting yourself, because I always, I really like the challenges. I really want to be able to accomplish those challenges. The problem is, it gets a little bit, it can discourage you more. It can be, more, energy consuming. And at the same time, you could go this path and be probably more successful. I learned it the hard way. I don't know. It's a personality flaw that I'm fixing. But don't go with the easy path. It's okay to go with the easy path if that makes sense with your personality. The last point I want to make is, how should I say it, a word that I don't like that much, but I think it's very important for investors. It's okay to be greedy. Now, maybe some of you also don't like the connotation of the word. I did search online looking for other words that would sound better, but they just nothing. All the other words were just greedy words and not, the actual word. Now, what I mean is this. For me, if you're a greedy personality in life, I don't know, that's probably not a good thing. But if you are as an investor somewhat greedy, to a certain degree of greediness, okay? Greediness of the degree of 3.5, whatever. Okay? That's okay. No. It's good. Because that means you are taking care of number one, you. That means you're not forgetting about yourself, and it's okay. I have to tell you, I'm probably greedy to the degree of 2.75. When I see some of my investors that are greedier to the point of 4.1, okay, I envy them sometimes. Sometimes I'm like, sometimes my gut's reaction saying, just shut up and take it. It's a good deal. When we sell a house and we need to negotiate and the selling terms and all of those, and I have few of my investors say, no, not good enough. I want more. They don't say that, but that's what they mean. And when very quickly I adjust my thinking and synchronize it with them, I adore them for doing that. I wish I was a little bit more. Not that I'm not, but a little bit more. I need another degree and a half at least. I'm getting better. But I'm just saying, I love it when they do that. They're not going overboard to kill the deal or to be unrealistic, but they're saying, no, we should do something a little bit better to improve so we get more money here. Perfect. Good for you. Okay? Now, if you don't have that small grain, at least to the degree of 1.756 of greediness, go find it. Tom and I are running a special again. Come see us. But seriously, you gotta have that. That will help you stay focused and make sure you make money. It's okay to want to make money. It's okay to be somewhat greedy, so you take care of your interests. Absolutely, it's not okay. You should, you must. That's in my opinion. So if you don't, some of us sometimes, when it gets to money, we're not as comfortable, especially our own money, to use it, to invest it, to make the most. No. Negotiate. I can tell you this. We do a lot of flips. A lot of the flips that we do, especially in Atlanta, every time we sell, there's a negotiation process. Before inspection and after inspection. Almost every property. Okay? I never agree to what they're asking. I may end up agreeing to it eventually. Never immediately. Always I play hardball. Always, because that means the other side's always, he's giving us easily. No effort. So next time around they'll come to the next point, they'll say, no problem, we're gonna get this guy. No, never. And I'm always trying to be creative. My agent in Atlanta, when she started selling properties, she was a newbie. So my guy, my broker, we got so much work, he hired someone that he knew she's a good person, she is, but she was a newbie. And she really empathized with the buyers at the beginning. And we got an offer, and she would say, we have a great offer, we should accept it. I said, what? It's like $20,000 less and you want to accept it? Why? Because they're nice people? No way. So she had to grow, to mature as an agent, and a lot of this had to do with what I trained her to do. She already knows now, after so many deals. The first answer is no. Then let's see how we can work it out. Okay, I'll give you this, I'll give you that. I always make it difficult and hard. Not to the point that I will kill the deal, but I never hand money out easily. It always has to be some sort of give and take. We've been going on this property. The DocuSign came in for the amendment on the price just before I started. In the past 2 days, back and forth. Oh my God, probably the longest. And they told her, after the inspection, they said it will cost $5,000 to fix the property after the inspection. We say, she already said, no, we're not going to agree to that. Said, but okay, so they came back and said, okay, but we want 3. She came to me, and she said, I think it's an okay deal. I looked at the number and said, no. And she goes back, she says, they won't budge. I said, let's do this. And I started giving her, call them at the evening before they go to bed, so they stew on it, don't go, do communicate, and I give her very specific instructions. And I'm like playing with their minds, so much so. Call them right now and say, the owner is running the numbers again. We don't know, we'll get back to you. So they know that we are there, we're not disappearing on them. Then call them again and say, I don't have an answer just yet. And then just before they go to bed, try to time it, call them and say, we need to think about this option or something, and they go to sleep with it. And you don't call them tomorrow morning. You wait. Now it's a little bit of a waiting, and they need to stew. Their first reaction was, their agent, the buyer's agent, about the $3,000, they wouldn't budge. What do you think happened? We made halfway through, but you must pay for the termite inspection. God damn it, $45 more. God damn it, I just lost another $45. Of course I will pay for it. Move on. Let's take a dime. I'm not going to waste time on this little dime when I got what I want, basically. I was already kind of giving him too much. From the price and this and that. So I felt this is not doing justice enough. And we have an amendment waiting for me to sign. So I'm just saying, I'm just saying, it's okay to be greedy. You have to take care of yourself. You have to make sure you're doing a successful deal after deal after deal. So let's just quickly recap. First part, we talked about the trivial stuff: location, deal, team, buy low, sell high, doing proper due diligence, know your market, investment criteria, exit strategies that you should have in place. Part two, we talked about defining your success, the determination to be determined, focus, and maybe another focus for fun. Have a mentor in your life. Have that person, guiding you. Educate your gut before you make a gut decision. Educated gut are much more attractive than uneducated gut, I can tell you from experience. Practice that confidence muscle by actually investing. Don't fall asleep, especially not in the times we're in. Have that good support system, positive but challenging support system around you to make those decisions. I hope for you, you're a doer, not a talker. I certainly hope for you. Otherwise, everything that I just said is irrelevant. Work on know your strengths and weaknesses and work according to them. And be greedy. Be somewhat greedy. Be nice greedy. It's okay. It's completely okay. I'm done. Thank you. Thank you. I just want to say this. I have what I call the Real Estate Investment Academy online. I'm going to put this video and this PowerPoint on the Academy so you can download it. There are tons of videos and courses over there. Most of them are free, some with a very minimal cost. So you can just go online to Simply Do It. Simply Do It is my company. Simply Do It, academy.com. So if you don't remember, Simply Do It is what you should have in your mind. Academy, obviously.com, and go online, and there's more videos, more related to real estate investing than this one. This is just a general broad on real estate investing. Everything else is CPA, legal, tax liens, even course that you attended and Michael attended, taxes altogether, general investing, flipping, remote, everything. So it's there. Thank you very much for your time. Thank you, Tom, for having me.
Anybody have any questions for Danny?
See me after.
Besides Atlanta, what other areas do you like? You said no to Phoenix, yes to Atlanta. What else do you like?
Right now, I like Dallas, Oklahoma City. I think you know those areas well, at least Dallas, and Atlanta. Orlando, I'm phasing out for exactly that reason. It just got to be crazy. So I love Orlando. I love many markets, but they're just not making sense anymore. So I want to go where it's still logical and makes sense.
Thank you.
Okay. Yes?
So how many have you researched and came up with these?
Say that again, please.
How many markets have you researched so far?
It's an ongoing,
Have you been to every metro city more than 2 million people?
I probably look at something that at least 1.5 million above. Rarely I would consider something that's smaller than that, but it's not just the size. But I would kind of, there's, I don't know, maybe the veterans one will probably remember, maybe it's coming back again, I hear it every once in a while, but there was a time that Cape Coral / AI Acres in Florida, Southwest Florida, was around, especially the previous boom. 500,000 people, not really a very strong employment base. I tried to buy there, and I saw that I can do it. I'm talking about the previous boom. Didn't really work. Very quickly I realized, no, something is not working, and I pulled out, and I'm glad that I did for so many reasons. But regardless, that it's just too small of a, people are still maybe going there now. Not for me. My humble opinion, again, not strong enough of a metro. So I want that strong employment base, and I want Dallas, what I love about Dallas, huge employment base, huge. And one of the topping the charts on growth, population. Dallas has an airplane of people coming in every day and staying. You gotta love it. Staying. So they're not taking, it's not a one-way ticket. So I love that. Okay? But that's what I'm looking, that's one of those things that I'm looking for. looking at. Yes, Stefan.
When you say that you get out of, say, Phoenix or something like that, and I assume that you're talking about buy and hold,
Yes.
do you mean that you're actually selling the property or you're just not buying there?
Most likely, at this point, I need to make that decision based on what's going on. For example, right now, we're not buying there anymore. Actually, for a year and a half now, we have not bought in Phoenix anymore. We just closed whatever came from 2011 into 2012 closing, so that's not a problem. Not buying. I'm advising my investors to stay and keep. Most of them are looking to build a long-term cash flow, passive cash flow portfolio. So why would you sell? Every time you sell, there is cost of selling and buying. So some of them I'm working on doing a minimal refinance. Also very conservative refinance, not pulling everything out, just pulling a little bit so they can actually use it and buy more. They all appreciate it well, yes.
And I know you're diversified in many different places. How do you track so many microfinance markets, pretty much? Is there any convenient way that you can keep track of Dallas or all these places, Chicago?
I don't keep track on that level of knowledge on every market all the time. I do keep tabs on all the markets that I'm active in all the time. The way I do it is simply by investing and doing. All the teams that I work with, we speak on a weekly basis. We speak on strategies, ways to improve for our investors, way to do better, what is changing. I see investors making deals and I see what's going on. So I really keep tabs from actual doing my scale and my investor scale, not just my personal investment. That's really the true answer is, every market that I'm in, I'm always very involved with the local team and knowing what's going on. I don't keep tabs on everything. When I'm looking at my next market, then I do more of an extensive search and I'm starting to read. And then very quickly, some markets surface and I then start looking at those, focus on few, and then I eliminate the ones that just don't follow my model. Okay? Yes?
Danny, I think the property managers in those cities are the link to those cities. I mean, if you're looking into a market, you need to be hooked to those property managers to get the real data.
Some data, some portion of the data, I agree, and those are the people that I speak with. But some data is more, some rents and vacancies and all those things, yes. But more, the agents are more good on what the market is performing, what the numbers are, how's the past several months have been, what's going inventory-wise. The property managers are not that strong on that side, only on the rental side. So absolutely, but for me, teams are especially property managers and agents. Yes?
You said Dallas, okay? What about the other markets in Texas, like Houston, San Antonio, Austin? What about those?
So the question is, why Dallas, if I understand correctly, and not Austin, Houston, San Antonio? Okay. Very popular question. And we have to take it one market at a time. So it's not all markets are born equal. Let's just see the situation. First of all, Austin and San Antonio are probably the more lovable ones, right? I don't care. We're not there for romance. We're there for investing. So that's aside, okay? Because I don't want to create a situation that someone thinks I don't like Austin. Great place to fall in love with, whatever. Not necessarily for investing.